Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. Thank you for being here. Welcome to another one of these quick take videos where we're answering your questions and covering some of the news that we're seeing in the markets. Important video today because with that market bump higher over the last couple of weeks, a lot of investors are all in once again on stocks and the pain might not be over. So what I want to do today is cover 3 ways to protect your money in a stock market crash. 3 strategies you can use to protect your 401k, your individual stocks, and really stay on that path to the financial future you deserve. We're also going to be covering a bonus idea that is going to be opening up a lot of possibilities for you. Nation, this pandemic is going to destroy a lot of people, okay? Not just their health or their sanity trying to stay in for weeks at a time, but it's also going to wipe out a lot of people financially. Now, while I can't help you with your health or that sanity other than to say just stay inside, keep your loved ones the hell away from this thing, but I can help you with your finances. First is by protecting your money using these 3 strategies to really protect your downside in any stock market crash. Whether we're talking about right now or 10 years, 5-10 years into the future when we see ourselves in another stock market crash like this. But it's also going to be a lot less stressful. We're going to be looking at 20 or 30% unemployment with this thing, and all that money coming out of the government, it's not going to get to a lot of people. I want you to be able to keep on that path to financial freedom. And the only way to do that is to protect your money now and be ready to take advantage of those stock prices when they do rebound. I also want to invite you to our private Facebook group. That's Let's Talk Money Together. They're on Facebook. I'll leave a link to it in the video description below, or just go to Facebook and look for Let's Talk Money Together. That group got some great conversations going on, and it's more of a one-on-one group kind of feel. Now, while the market is off its lows, and a lot of people are talking about how the rebound has already started, I think you still need to be looking at protection. We're looking at unprecedented unemployment numbers, and almost every industry is going to be affected by this. Okay, we've had more than 6.6 million people file for unemployment last week, the most ever, and that was just after the 3.3 million filing the week before, which was another record. If you take those alone and the 3.5% unemployment we already had, that's 10% in 2 weeks alone. Okay, this is going to be much worse than I think people are actually seeing for what it is on the economy. We've got those huge stimulus programs coming through, $2 trillion plus in stimulus money coming, but it's going to be slow. Some of it's going to be poorly rolled out, and it might not help people if they're just too afraid to leave or can't leave their home to spend it. So the market is really rebounding on that idea that as the virus curve flattens out, those restrictions are going to be lifted and people are going to go outside and start spending money again. But what happens when there's a second wave of the outbreak in the fall? And this all leaves the market dangerously exposed to any other black swan events, really, right? Anything else that goes wrong can go wrong and really take this market lower. So I think you've got to be protected here for that worst case scenario. So I want to talk about 3 ways to protect your money from a crash, 3 strategies that are going to help you come out of this thing actually richer than you already are and with a whole lot less stress, right? You're not going to have to worry about looking at the market every single day because you're covered on the downside. So we're going to talk about the asset classes today. We're going to talk about buying into maybe some of these other assets like gold and options trading. And then I've got a bonus strategy at the end of the video that's really going to open up a whole lot of opportunities for you. So first I want to talk about owning different asset classes. And here we're talking about bonds and real estate, okay? So the 3 main asset classes, you've got stocks, which is an equity ownership in a company. You've got bonds, which is basically debt borrowed by a company and paid back in interest. And then of course you've got real estate, which is that property, that cash flow property. Now, how these asset classes protect you from a stock market crash is that they react to the economy differently, in different situations, right? Bonds are a fixed income, so it's a fixed payment and a contractual obligation by the company. So it's much more stable than stocks, which is really just a promise on future earnings. Okay, bond prices, as interest rates go up, bond prices come down. And conversely, in a recession, when the Fed is cutting interest rates, then bond prices tend to go up. So, as we're going into a recession and interest rates come down, as stock prices come down, then having some money in bonds is going to protect your portfolio. Not only in that idea that the bond prices might come up, but you're also collecting that regular interest, and they're just going to fluctuate much less than these other 2 asset classes like real estate and like bond or like stocks. Now there is one thing that we want to discuss is why did bond prices fall in March? Okay, if you look at any bond fund or a bond index in March, and we'll see the same thing in real estate funds as well. So they took a big hit there in mid-March, and a lot of this was on that liquidity in the credit market. Okay, we had $3 trillion plus in treasury issues. Looking at treasury issues this year for the government to not only fund its normal annual expenses, but also that huge stimulus program. And investors were just selling what they could. Okay, it wasn't necessarily a matter of investors selling what they wanted to, getting out and protecting their cash flow and what they wanted to. They had to sell out of everything. There were so many margin calls as the stock market dumped 35% of its value. People had to sell whatever they could just to raise cash to meet those margin calls. Still, these bond funds like the Vanguard Long-Term Bond Fund, this ticker BLV, is up 5.7% this year versus a 23% loss in stocks. And even at that worst point, this bond fund was only down 8% versus a 35% loss in stocks. So those bonds are going to protect you even at the worst of the stock market crash. The second asset class I want to talk about is real estate. And this doesn't mean running out and buying a single family house that you can turn into a rental. There are a lot of different types of real estate investing. And the one you really want to look at here is REITs, real estate investment trusts. These are companies that own commercial real estate, rent those out, and then pass the cash flow on to investors. They trade just like stocks, so they're extremely easy to buy and sell. And these are just great long-term plays as an asset class, but for other factors as well. Real estate keeps up with the pace of inflation. So if you're worried about that $2 trillion in stimulus from the U.S. government and many more trillions of dollars globally coming into the market and causing that inflation, then you want to be in real estate, which is going to see those real estate prices and those rents creep up as the value of currencies fall. And while I usually like the Vanguard Real Estate ETF, that's ticker VNQ, and I recommend it here on the channel. It's a fund that holds a lot of these real estate investment companies, so really broadly diversified across different property types and geographically. The fund is down 30% year to date against the S&P 500, which is only down 23%. Okay, and the problem here is that this fund, since it is so broadly diversified, it's holding a lot of those loser property types like retail, like office, like hotel space. So what I want you to do is go out and look for some of those other REITs specializing in maybe data centers. I'm thinking examples like Digital Realty, which is ticker DLR, or government property space, which is ticker DEA. A lot of these storage properties and warehouses that are taking advantage of this boom in deliveries are really going to do much better in this coronavirus and the shelter-in-place environment. Now, our second strategy here, after getting an exposure to those different asset classes like your real estate and your bonds, is investing in gold. And again, there are so many different ways you can do this. You can buy physical gold, you can buy the miners, you can buy the gold ETF. And gold is a great protection against stock market weakness because it's a store of value, okay? It's going to protect you against the inflation that we're seeing or that we could see with these trillions of dollars of stimulus money coming down the pipe. And it's got some upside return that can even offset some of your losses in the market, okay? I actually did a review of vaulted.com about 2 weeks ago and talked about some of the factors that go into gold prices. Gold is up over 13% in that period. So some upside return potential as well as just protecting your money. Again, there are different ways you can invest in gold. You can go with the gold ETF, which is a fund that tracks the gold price through some of the derivatives that they buy, and that's the ticker GLD. You can also buy the miners, so the gold miners in this, and that's the ticker GDX is the main gold miners ETF. You can also buy physical gold. So I talked about the factors that go into gold prices and how to determine if gold is a good investment right now on March 20th, and talked about how I was buying gold on that vaulted.com app. And again, it is up over 10% already since then. So that's just about 2 or 3 weeks over that period. Now, just like those bond prices, we saw gold fall in mid-March, and actually came down 12% from its high. And again, this was on that sell what you can panic. Okay, there were so many margin calls for investors. They had to sell out of whatever they could to meet these margin calls, to get into cash and protect their downside, that they were just selling out of everything, even the protection, even the safety assets like gold and like bonds. There were also some fundamental worries here. So central banks have been a huge factor in the upside on gold prices over the last 10 years because central banks have been putting more of their reserves into gold. And a lot of investors are now worried that those central banks now, with all this stimulus, this cash needed for these stimulus programs, they might be selling out of some of their reserves. There's also the potential for some of that lower tech demand in this. Okay, so tech products, gold is actually a very good conductor of electricity, so it's used in a lot of these tech products. And of course, if we go into a recession and there's less demand for those tech products, there's going to be less demand on the gold side for that as well. Even on the worst of that drop, though, we're still only down 3% year to date against a 35% loss in stocks. And now we're up almost 10% on the year in gold. So another investment that's going to protect your money. It's going to give you that store of value, that upside return, and that protection against the inflation that we could be seeing soon. Our third strategy to protect yourself in a stock market crash, before we get to that bonus idea, are going to be options investing. And really what I want to talk about here are covered calls, so call options, and protective puts. So now options, you can either buy or sell an option. And what options do, they give you the right, but not the obligation, to buy or sell something, a stock, at some point in the future at a specific price. Okay, I actually did an options investing video that I'll link to in the video description below. Check that out because it's going to give you more detail on some of these strategies and what we're talking about. But I want to cover calls first. Okay, and a call option is just an investment in an option to buy shares of a company at a specific price at some future date. Okay, and what you do, you pay a premium. So you pay a premium price now for that option, and then in the future, if the stock rises over that point, then you can buy shares of that at that pre-specified point. Well, now what's a covered call is actually selling calls, so selling that option to another investor on stocks you already have. So let's say I've got shares, 100 shares of Pinterest, and I'm worried about the stock falling lower in this in this epidemic environment. What I can actually do, I can sell a call option against that. So I can sell one contract, which is worth 100 shares of Pinterest, to another investor. He's going to pay me that premium. So say $3 a share for each of these shares to sell it at, we'll say $25 per share, right? So he's going to pay me that money now. I'm going to collect that money. I'm going to keep my shares. And then if those shares of Pinterest are over $25 by a certain date in the future, he can buy them for that amount, right? Of course, if the shares do not make it to $25 a share, or they're under that, or they fall from where they are now, then I'm going to keep the shares. I'm going to keep the $3 that he paid me for that premium, and he's going to do nothing with that option, right? He wouldn't want to buy those shares for $25 each from me if he can just go into the market and buy them for a lesser amount then. So this isn't total protection on your money because, okay, so I've got now $3 of protection on those shares of Pinterest. But what happens if they fall $4 or $5 or $6? Okay, I'm still taking a loss on those shares, but it's still going to cover some downside, right? You're still collecting that premium on those shares from that and other investors. So to sell a covered call, obviously, is pretty easy. You just look for any shares that you own either 100 shares or more, right? Because each call option is worth 100 shares. So you've got to sell them in blocks of 100. So if I've got 500 shares of GE, then I can sell 5 call options against those, collect that premium money, and then be partially covered on my downside. Next here in these option investing strategies is called a protective put, okay? And put options are just kind of the opposite of a call, right? A put option gives you the right to sell a stock at a certain price, okay? So call options were the right to buy a stock at a certain price. Put options were to sell a stock at a certain price, okay? Now, and again, there's two sides to this. You can either write a call or a put option, which is sell a put option, sell the right to someone else to sell you that stock, or you can buy the put option and be the one that's buying that protection, that right to sell it to somebody at a certain price. And how this is important here is because, so if I want total protection from downside, so again, let's use the example of those Pinterest shares. If shares of Pinterest are trading for $25 each, and I'm a little worried that maybe they'll fall a little bit. So if I want to protect my downside completely at, say, $23 a share. If I'm fine with them falling a little bit, but if they fall below 23, then I'm really going to be hurting. I can sell someone the right through that put option to sell the shares to them at $23 each. And now you can actually use put options on a stock or an index. Okay, so not only can you totally protect yourself from the downside in a stock, you can also buy put options on an index. So I usually like using the S&P 500 index ETF. That's ticker SPY. I'll buy put options on that at a lower price than the index is trading now. And basically, if the index keeps falling, so if the stock market itself keeps falling and falls through that point, then I can collect a difference there between the price that I've locked in on that put option to sell to someone else and the price where the stock market is. So it effectively, helps me hedge a lot of my exposure into stocks. So if the index keeps falling, I can make money on that, even as maybe I'm losing some short-term money in some of my stocks. Now I want to talk about that bonus idea and protecting yourself from a stock market crash. And this is in a side hustle, creating that income from either a side hustle or an online business. And I know this isn't going to be as popular with a lot of the stock investors here on the channel, but please spend as much time thinking about this as you do about stocks. Okay, we've got a lot of great videos on different side hustle ideas, different ways to make money here on the channel, and I'll link to some of those in the video description below. But there are a lot of reasons to consider a side hustle or an online business, even if it's just a few extra $100 a month, that I don't think a lot of people have thought about. Okay, a lot of people before this whole stock market crash were totally invested in stocks. So, as those stocks have come down, they have no opportunity to take advantage of these lower prices. Well, wouldn't it be great if you had extra money coming in? I know so many people are living paycheck to paycheck, so they can't necessarily, cut back their expenses to be able to invest money at these lower prices. But what if you had a few extra $100 coming in each month? You could then add to those stocks, dollar cost average down, and really take advantage of these lower prices. Also, though, for just income insurance, okay, there is a shift in work in the United States and globally right now. That shift to an independent contractor, and that's only going to accelerate. Okay. Companies are seeing how easy and cost effective it is to just have everybody as a contractor and working from home. And those jobs that you counted on in the past may not be there in the future. So anytime you can put together an extra side hustle, a side income, or even an online business that is going to protect you if that day ever comes when you actually do need to depend on it. Again, I'll link to a few videos in the description below on different side hustle ideas, different online business ideas that you can start right now and be making hundreds of dollars within a month. In fact, click on the video to the right for my favorite side hustle ideas. 10 side hustles and online businesses you can start right now, start making money within a month. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.